In general, very impressive. I had an opportunity to tour the market this morning. There's a lot of great new product coming on, and importantly, there's a lot of big leases with prominent companies going into those new buildings that are being developed. So that's a very encouraging sign when you see that anywhere in the world. I know there's some concern that the market may slow down a little from the pace you've seen historically, but that doesn't, I don't view that as a particularly large negative. I think what you're going to see is that the space that's coming on is going to be absorbed by very good companies, which is what you want. And then there won't be the same volume of new space coming on behind that, because the opportunity to develop new sites isn't that available, or those opportunities aren't available as they were historically. No, I'm not worried about the slowdown for the following reason. You're still going to see 3% economic growth here. It's now one of the world's large economies, and I can tell you that many places around the world would love to have 3% GDP growth coming on the heels of some very large growth in the last few years. So this is an economy that's grown a lot. It's going to continue to grow, and I suspect before long that the growth rate will pick up and go above that 3% again. You have the types of investors that you have. You're going to see private equity. You're going to see sovereign wealth funds. You're going to see REITs. You're going to see all manner of what we would call institutional investors that already have interest here, continue to have interest, and you're going to see that interest come from North America, the United States, Canada. You're going to see that interest come from Asia. I suspect you'll see some come from Europe. So you're going to see the interest of capital coming here from all around the world. Nothing flows more quickly around the world than capital to opportunity. You'll see some interest in new development projects, but generally that's a subset of the capital. It's a smaller subset of the capital that's available out there, because newer development projects are the more risky end of the commercial real estate spectrum. There's a lot of interest now around the world, particularly in top tier cities like Sao Paulo, in completed stabilized properties that are leased to high credit tenants. And you certainly have a lot of high credit, high quality companies that are taking space here. Well, you have a couple kinds of risks in real estate, generally in commercial real estate. Number one, you have risk that there will be a decline in the interest of users. That's driven by uncertainty in the economy. From what I saw today, the amount of interest from users, prominent corporations in commercial space here, while it may be a little slower than it was before, it's still a good amount of interest. I mean, the number of big leases that have just been signed or are pending here is quite impressive, and it's particularly impressive relative to what you'd see in most places of the world. The other kind of risk you'd see is if you had overdevelopment, which would cause a property bubble if you had too much debt. With the level of vacancy you have here in the office market, slightly less than 10%, maybe going to slightly more than 10%, and good absorption coming in behind that, I don't think that's a particularly large risk. It's not that it's not a risk at all, but we've seen much more out of balance circumstances in other parts of the world.
So there's no risk of bubble in your opinion?
Well, there's always some risk. There's always a little bit of risk, and there's certainly always risk when you see a little bit of an economic slowdown and you see a lot of new development. I don't think that risk is particularly out of balance here. And again, I don't see a lot of new space being able to be developed behind what's under construction now, and it appears that there's a really healthy amount of demand in the marketplace for space.